a concise approach to top-down market strategies and the forces affecting investments. That's the spoken word on investing.
We're going to get the spoken word on the stock market for 2015 with our chief equity strategist, John Blank, who joins us via Skype from the West Coast. John, you're telling us that in order to understand the stock market this year, we actually have to look back to last year. What do you mean?
Terry, if we were here doing this call a year ago, what I would be telling you is about all of the strategists and economists in the world, all of them, all 100% of them, thinking that interest rates a year from now, today, 2015, January, would be about 4% of the 10-year. And the absolute opposite has happened. The 10-year Treasury rate in the United States, and all global interest rates that correspond to it, has fallen. And now the 10-year is actually even below 2%, 1.8%, incredibly low. So what has happened is somewhere in the midst of last year, a sea wave of change came over the market. And what happened, Terry, was the European Union faced off with deflation. And deflation was basically ramped up into what's going to be quantitative easing this week from them. And since the last 6 months, all that we've seen is rates falling and the euro falling in response to all this action that's coming into play. And along with that, swept along the oil price, which is denominated in dollars. So as the dollar got stronger through this whole motion of having the euro go weaker, it joined the parade, and now suddenly we're here. And you have to understand what happened. Basically, Europe didn't get its act together. Now we have this round of quantitative easing. Now we have to look at 2015 from that point of view.
So let's talk about oil a little bit more. You just mentioned it a second ago there. What impact is oil going to have on the stock market this year?
Well, we've seen a cut from $95 a barrel to $50 a barrel in West Texas Intermediate, Terry. What that's going to do is eventually, and I mean eventually in the sense that we haven't seen it yet, we're going to see some growth in expenditures by hourly wage type people in the United States and outside the United States. And this is going to help the real baseline, middle and lower end consumer most, which is exactly where we need that to happen. And that's going to start taking up the retailers, taking up the consumer companies, the consumer producing companies, and consumer staples companies. And this should be very helpful to the overall breadth of the stock market going forward into 2015.
What about earnings? We're in earnings season. Is that going to be the lifeline for the stock market?
You know, Terry, the earnings season is going to help out. But what we've seen already is that there was a $133 per share S&P 500 number back about a month and a half ago, 2 months ago. That's fallen to $127. $6 a share has fallen off the S&P. And so now you've got fair value sinking because the energy company cuts through the oil price are actually sinking the S&P. So what we need to see, and we're not going to get it this time around, is earnings rising on other companies. But since there really isn't any effect coming upside from oil yet, I don't think this particular round of earnings is going to be helpful at all.
We've always got the strong dollar.
We do have the strong dollar, Terry, but again, these are all effects that are going to be playing out over the coming quarters more than they were over the fourth quarter of 2014. So I don't actually expect any of these to actually translate into something visible other than oil. And that's the problem right now, is we're really not going to get that lift. And that's why the market's staggering around the last few days.
All right, so looking at sectors as we begin the new year here, you're actually identifying early winner to be infotech. Why?
Yeah, absolutely, Terry. Infotech is where you want to be because you've got a couple defensive stock areas, utilities and healthcare in particular, that are the big story stocks of 2014, and they're way overpriced, way overpriced. So if you're looking at biotechs, they might get sold off. If you're looking at utilities, they might get sold off. Sometime in this next year, they're going to be sold. But infotech is one of those spaces where you do have the growth rate, you do have the upside estimate revisions, and you do have the valuation in play. And so this remains the spot, the sweet spot, where there is growth, there is cyclicality, and there is value. And that's where I would tell people to spend more time than other places in looking for a stock to put in their portfolio.
You have one that you want to drop name here?
You know, Terry, I've mentioned before BroadSoft. This is a company that works with enabling IP protocol networks out there, ticker BSFT. This company is not a large company, but it's in that space where you're in that network communication space, enabling all these computers that you and I are working with to talk to each other. That's where you want to be.
You also say that the financials remain attractive.
That's true. You know, Terry, I put a bid out. Zacks ranked number one right now is Berkshire Hathaway, Warren Buffett's company. And a lot of that reason is that the property and casualty companies, the insurance companies, are cyclical. And the bulk of the upside to the Warren Buffett's Berkshire Hathaway is coming through the P&C businesses. And so I still like that business. I also like real estate because global real estate has to be a place where there's a benefit from lower and lower interest rates. And we've got to believe that you've got to make some money where the realtor are and where the commercial real estate guys are. That's the spot that's got to work right now.
You say that healthcare is slipping to just attractive, and of course, energy in the tank big time.
Energy in the tank big time. Absolutely. If you're looking for a healthcare stock, I'll throw one out there, Terry. The Concord Medical Systems. This is a company that's providing, CT scanning and that nuclear magnetic resonance imaging, basically, mobile imaging and devices to help healthcare in China. And we're seeing more and more that, this is a spot. If you want to play the healthcare game, you might want to look to China for that one.
All right, thanks, John. And that is the spoken word on the stock market so far for the new year. With John Blank, I'm Terry Ruffalo.